All right, Eric. Well, welcome back, man. Good to see you again.
Thanks for having me.
So what's going on right now in the housing world, man? What's news?
Rates, inventory still. Everybody, well, the marketplace and the media and social media is all talking about, the housing crisis that we may or may not be in. Is there a bubble that's going to burst? What's going to happen with the housing market, especially with, election coming up? So, we keep hearing about high interest rates, low inventory environment. I think it comes down to consumer confidence. Inflation is constantly being talked about in the media, in politics. It's the constant hot button. So right now there is a very high probability that the Federal Reserve is going to cut rates this meeting in September. Mm-hmm. So we're kind of already pricing that probability in right now. So we're seeing a little bit of a reprieve with interest rates, spurring a little bit of confidence out in the marketplace with some of these home buyers. So, they've kind of put themselves on the curb right now as far as buying because of where prices are at and where the rates are at. So when you get a little bit of a clawback in the interest rate environment, you're seeing some buyers dip back into that marketplace. So it's a good thing. It's an overall positive thing.
You talked about this being an election year. Does that typically affect the housing market? I mean, how does the election affect the housing market?
Yeah, I think every part of the economy is affected by, some sort of massaging in of some of these numbers, and are they strategically going to make the economy look a little bit better for the the current president? But I think it's a different environment this year. In fact, I know it's a different environment this year, especially with what happened a few days ago with the attempted assassination. I mean, all the temperatures are hot right now. So the housing market is right now it's incredibly hot because inventory is still a problem. Mm-hmm. So when you have all the economics behind inflation, is everybody feeling a pinch in their pocketbook? Are they going out to purchase homes? Rents are still incredibly high. I know we're seeing and hearing a lot of people that are unwilling to trade off their low interest rates that they've had, maybe 5-7 years ago. And are they willing to sell their home, give up that low interest rate on their current mortgage to trade off for, a high 6, low 7% interest rate? Mm. They're not really willing to do that trade-off just yet. So I think the political environment and everything that's going to be kind of a caveat to that is definitely going to have some bearing on the marketplace and some decisions. But overall, it's really what's going to happen in the pocketbook of the consumer.
Mm-hmm. Yeah, I was going to ask, and I think you kind of touched on it a little bit. We're talking about there being low inventory. I mean, is just what you kind of outlined why people aren't selling their houses? Just for the example, like they were tied into a low rate, they don't want to mess around until stuff kind of settles down.
Yeah, man. I mean, there's a very high percentage of people that are in anywhere from a 2 to 4% range on their 30-year fixed mortgage rate or their mortgage in general, right? Mm. So if they're in a 2 to 4% mortgage rate now, the necessity to vacate the property, to list and sell, is not really a need to move up unless you've got some move down buyers, maybe empty nesters that need to trade off on the size of their home. Mm-hmm. And conversely, if you're having children and your family is growing and you're busting at the seams to get out of that house, then there's a need there, and you're willing to do that trade off. But a very high percentage of the homeowners right now aren't simply willing to trade off that low interest rate for a higher interest rate just to move.
Yeah.
So it's a problem.
I got you. So talk to me a little bit about somebody that's coming to you for a loan. What are the first 3 things they need to have prepared when they're going to go to buy a house?
Well, I think the first 3 things, and this is debatable, right? But the first 3 things that you've got to do when you're considering buying a house is, one, you've got to prepare your finances. And that's a lot under that individual singular umbrella. Mm-hmm. But what that means is you want to check your credit score. You could, a lot of credit monitoring services like Credit Karma. I know all the credit cards offer them, but at least you want to get a good read on where your credit score is. Mm-hmm. you want to look at your bank statements to see balances where you could kind of trim some frivolous spending, cut back on spending, and maybe step up on the savings and accelerate your savings to maybe establish a reserve account or an emergency fund. You know, things like that in that financial arena where you're preparing your finances is step one. Step two, I think you got to find your team. So a part of that is going to reach out to a mortgage lender or a loan officer to start the pre-approval process, get that all situated. Another component to that is reach out to a realtor, and eventually you're going to hire a realtor to, you know, obviously help you out with the negotiation and the search process. So preparing your team to help you out in a very, very stressful environment and situation is probably a good idea. And then third, I think it's, you know, if I'm a potential home buyer, not only am I going to prepare my finances, find the right team, I'm also going to create my wish list. So, you know, I want to know what my must-haves and my kind of nice-to-haves are. You know, you're going to have your negotiables, non-negotiables, and then you could reverse engineer the search process with your realtor when you're out in that process. And once you start the home hunting process, you've got your wish list that, you know, again, you're going to have your must-haves and your nice-to-haves.
What's the biggest reason that somebody isn't approved for a loan?
I got to say the number one driver behind the inability to get pre-approved is first and foremost credit. So we're looking at, you know, some lower tier credit scores that just might not be ready yet, or maybe their credit score is just not ready yet and they want to get it a little bit higher before they enter into the buying process. So credit score is the number one driver. And I think the second driver right now is a combination of the finances, right? It's either going to be, do they have enough disposable income to be comfortable making that next step into home buying? Or they're going to try and at least start saving up a little bit of money for a down payment, maybe pay off some credit card debt that they, you know, that they want to get rid of before they enter into a mortgage. So I think credit and cash are the two drivers behind the inability to get a mortgage pre-approval.
Do you see any good deals out there right now on houses? I mean, are there any kind of in the area, or is it pretty much a seller's market?
Oh, man, it is I think we're still in a seller's market because, again, inventory is so low. There's not a huge pool of buyers out there right now. So, you know, the pendulum has kind of swung back a little bit for buyers. So we're seeing more negotiated deals. We're seeing a little bit of decreased list prices or reduced list prices out there, but it's still incredibly competitive. And I would say right now, you know, the balance of powers is a little bit on the seller side, but as soon as interest rates drop, man, and this huge amount of buyers are going to enter into the pool, that balance is going to shift even more to the seller side.
I gotcha. So you recently closed a VA loan, right? Can you tell us a little bit about that and how people might be able to qualify for that?
Yeah. So when you are a veteran and you're trying to buy real estate, we're going to get what's called a certificate of eligibility to see what their eligibility is for that VA home loan. Some veterans are going to have service-connected disability. And we just closed a veteran that actually had 100% service-connected disability. And in the state of Ohio, they're going to have a pretty large reduction in their property taxes to give them a much better monthly payment. So if a veteran does have that 100% service-connected disability, we're going to call the local municipality, depending on what county you're in, but the entire state is going to allow for a reduction in the property taxes under what's called the homestead reduction. So my suggestion would be if you have your 100% service-connected disability and you're receiving that monthly benefit, we can call over down to the courthouse and get exactly down to the penny what the reduction would be. So we could dial in that monthly payment a little bit better, and it's going to give them a more attractive monthly payment. When we closed on that gentleman about a week ago, on a $160,000 purchase price, and it was their sale price, and they closed at that, they were able to save over $850 a year in their property taxes. So give them a nice cushion in their monthly payment.
Nice. So we've talked about this before, but describe to people the benefit of going with a local loan officer like yourself as opposed to the Rocket Mortgages and all the ones that you see kind of advertised everywhere?
Yeah, so there's a couple benefits. One is the time and attention that we have to uphold our local reputation, right? These online lenders, they don't have a local reputation to uphold, and they're not going to give you the attention that you deserve, the attention that you need, and more than likely, you're not going to get the information that you're looking for either. So they spend very little time in issuing these pre-approvals. They spend very little time in vetting out these buyers. And as a seller of the property, when you see these pre-approvals come across, you're not going to put yourself into the best competitive position because of their reputation. Not only that is these big guys have marketing budgets that they got to pay for, and they're going to bake those into either their interest rates, their closing costs. So typically, not always, but typically, your online lenders are going to lead with a low interest rate, and then there's going to be a whole bunch of costs attached to that interest rate. So I think you're just, at the end of the day, you definitely want to go with somebody local, because when things do arise, which they always do in real estate, you're going to be able to get in touch with them. And if you're not, you're going to be able to either drive to their office. And again, man, they've got that reputation to uphold in the local marketplace. So they're going to take that customer experience is going to be that much better when you're working with somebody here local in town.
Mm-hmm. So if you had to forecast, kind of looking out, the next year, kind of in housing and real estate, what are some of your thoughts? Where do you think it's headed? I mean, you mentioned September; they're going to make some kind of some announcements and stuff. But what's your kind of gut feeling on where things are going?
So a 12-month outlook in the real estate market. As you know, this is very, very local, right? Can't even speak regionally or even nationally on the market, because again, these national markets behave differently than they do here locally. But here's what I think. Regardless of where the interest rate environment goes, regardless of who's in office, we do not see the violent upswings and the violent downturns that some of these other bigger markets experience. So while we see appreciation and depreciation, our peaks and valleys are a lot less violent and a lot less volatile. So I think we're going to have a lot of stability in our market. I think we're going to have a lot of confidence in our market. I know the downtown area is, struggling right now with all the road construction and, a lot of the different variables that are going down here. But we're pretty resilient around here, and I think our real estate market is just as resilient. So I'm pretty positive over the next 12 months for the outlook.